Okay guys, I'm back. I just realized that the software that I use for recording my screen has no pause function. That's why I had to stop my video. Well, let's continue. So this is the cipher pattern, and minus 20, 28.7. I think I already measured that, yes? Or not. If I measured that, then before that we should have a winner obviously, and this one should be a loss. And yes, it was a loss. We break through and then went to the upside. Okay, then continue next. This is broken C to D. Small Gartley of this needs to be checked. So we have it this way, then we have a reversal, then we have a penetration and close back, and then we had a stop loss. Nice. Why not? Stop losses are investments. If you do not invest anything, you have no return. 24 and 5, 28 even, I suppose. 24, 5, 28 even. 24, 5, 28, and this time it is a stop loss. The drawdown increases. Okay, so what is win probability? Is 46%. It is not very big. So the average risk reward is 1.82, much greater than the one from euro dollar when we use sharp reversals. It is very difficult to to get the sharp reversal while you enter. You can. It is well, how can I explain it? Because the reversal is very sharp, and you realize that the reversal has started. It is already late, and when you enter, you have that very big distance towards your stop loss and very small distance left towards your take profit, and that's why your average risk reward stays 0.82. But if you will not wait for confirmations, you will never have a good accuracy. You will be you will hit your stop losses very often. That's why limit order is also is not a good decision for trading. Okay, on dollar yen, sharp reversals aren't that often like on euro dollar. That's why on dollar yen it makes no sense to try to enter the sharp reversals. You just skip few trades, few winners maybe, but you will save so many losses. Okay, another sharp reversal here, and a cipher pattern here. It had a good reversal, but it exceeded this. Oh no, it not exceeded. Look at this thought process that I have. First of all, this is the reversal. We had that reversal, then we penetrated, and then we entered at this candle. By the time when we entered, yes, we were above that level, yes, and only on the next candle we penetrated it back. So now let's place our stop loss here, yes, and then we entered at this candle. I remind you, stop loss is here, it is 31.4, and take profit is rate 2, it is 13.6. 31.4, 13.6. Come on, 31.4, 4, 30 and 6. This time it was a take profit. Pretty good. We didn't exceed our stop loss. We didn't hit the stop loss. Okay. Well, another sharp reversal, yes. So if you wait for confirmation, it already hits targets. It seems that the best decision to place a limit order, but it is not. In the long run, you will hit more losses. Okay, we didn't hit this completion. Then the cipher pattern. We didn't complete it here. Then we go higher and higher and higher. The reversal started here, because two red candles are this. After that we break it higher and we move higher and higher, we didn't break it back. Cipher, broken C to D. Well, dollar yen seems to disrespect that rule of broken C to D, and it reverses no matter what. Need to do additional testing on this. What if this broken C to D rule filters more losers rather than winners, or it filters more winners rather than losers? Okay, continue. This large Gartley unified Gartley formation. We didn't break this. We had a reversal, then we go high, lower and lower and lower, then we spike it through, and then we close above. Wonderful situation to enter this Gartley long. Starting from here, stop loss goes to 73.3, take profit is 44.1, 73.3, 44.1. And it was a take profit. Boom, the drawdown recovered. Now we have a highest high on equity curve. So our equity curve has the maximum number, 211. After we hit that 50, immediately we have that cipher pattern completion. Yes, so let us see how the cipher performs. We had the reversal here. Let me stretch it this way. We had the reversal here, then we spike it through and back again, and we could not enter because it was invalidated. Just if only it was 1 decimal of pip shy, then it would be a valid trade, but for now it is not. Okay, another cipher pattern. Let us examine what happened. It has only red candles, so nothing happened. Another cipher pattern, and it has a sharp reversal. Let's examine. Maybe we had some green candles. No, we didn't have green candles, only one green candle. If only we had 2 green candles and then test back, then it could be a very good entry. Okay, what is here? A unified Gartley. We completed this candle. Let me check it. 1 green candle, it's not a reversal. Okay, 2 green candles, this is a reversal. We spike it through, then we come back, and it was a false signal. Let's calculate the stop loss. $32.5, and this one is 49.5. 32.5, 49.5. 32.5, 49.5. Okay, so what we had is a stop loss. You see, immediately after the drawdown was recovered, we started a new one. Again, we are negative. We have less than we generated, than the maximal, then we had maximal. Okay, it is twist tonguing. What is the situation? No, we didn't have a reversal, only 1 red candle. Nothing here. It's about patience. You need to wait for the best setup to set up. Okay, nothing here. Maybe you will spend weeks in waiting for that setup, and it is complete. It shows the reversal, and after that you will realize that you cannot enter this setup because what? Because it didn't do the second test. Okay guys, look at this wonderful situation here, pretty cool. we completed the pattern. You see that we're higher than that. We had initial reversal, then we had a test, then we broke it back to the downside. So this candle is our entry, this one. Let's put the stop loss pretty wide because the pattern is very small. So we had what, 26.3, and we should have this target of 19.9, but we gapped through that target and had the target of 29. 26.3, 29. The price opened at 29. To 29, and it was a take profit. It is so nice to have take profits. Kind of pleasant. Okay, nothing here. Zoom it out. This godly formation, large one. So what is the completion? Here we go higher, we go higher. Okay, and disputable situation here. We did test, but we didn't break, we didn't exceed, I suppose. Okay, what says this high? 61.0. This high says 61.0. This high says 61.0. We tested, but we didn't break it. We didn't spike it through. Oh, need to skip it. Need to skip it. It should exceed the previous. It should be a kind of false breakout, although we had that wonderful waterfall. I will skip this pattern. But the next one can provide a good opportunity. Maybe the next one is good. So let me zoom it in. Sorry, out. Then I will stretch fibs. This one is not a reversal. The reversal happened on the next candle. Yes. Then we didn't exceed. We exceed here on this candle. You see that? We tested here, then we exceeded here, and then we closed back. Obviously, we have this test. After that, we put our stop loss. It is this. Then we go here. What is the take stop loss? 43.9, and take profit 118.8. Wonderful. 43.9. 118.8, and no more take profit that recovers all our drawdowns. Boom. You see what equity curve turns into? So these drawdowns become so insignificant, it becomes so small if compared to the profit that is made. That's why I should look at a larger perspective. Maybe something that you have right now, that drawdown of 100 pips is nothing. Maybe it is not. Well, unless you sabotage yourself. And the self-sabotage is disbelief in your system. It is disbelief in your ability. It is lack of confidence. Why do I have lack of confidence? Because you never did the backtest. And why you didn't do the backtest? Because it is monotonous, because it requires too much time, drawing the patterns, finding the best execution for this pair on that pair. And you didn't do the backtest because you don't have an MPS5 pattern recognition software. This is your problem. Okay, so what do we have here? We have a reversal. Basically we don't have it. There's a doji in between them. We have a doji, and then we have only one green candle, and then we'll break it back. Could enter at this. We didn't invalidate that. Yes. Okay, after that it was invalidated. Need to skip this. I need to think it out to give it a good thought what to do in this situation when we have a doji. We have green candle, doji, and another green candle. Maybe we should simply skip that because it is neutral, but I should first lay down the rule, and second I should backtest that. I should not change my rules while trading, and I consider my backtesting a paper trading, so I cannot change my rules for now. I am to stay with what I have. Okay, we had 2 green candles, reversal started, then we had that break to the downside and we exceeded the limit. If only we didn't exceed, this bull candle could be a very nice entry. Yes, but this time we exceeded. Okay, the same broken leg, broken leg, broken leg, nothing here, nothing. Too many opportunities are filtered, and this is good. Okay, nothing here, broken leg again, sharp reversal I suppose, but let me check it. Maybe we didn't even touch that. No, we didn't touch. And this is what completed is this. Again we have doji, then we have a test, and then we have something that looks like a reversal. After that we penetrate this and then we break it back. By the time we broke it back to the downside, we were below this invalidation level, so this spike to the upside appeared later, and it is not even invalidated the pattern. Okay, so we had initial reaction, yes, then we break it back, and then we break it one more time, and this means that we have a reversal. The stop loss is placed here, starting from this point. Obviously this spike didn't test that stop loss level, and it was a good 28.9 to 31.1, 28.9 to 31.1, 28.9 to 31.1. Double tops provide much better risk to reward if compared to sharp reversals. Well, I already told you, maybe. Yes, maybe I already told you that. So just reminding you. Just reminding you, if you will compare, average risk to reward is 0.74 compared to this 0.82. And this is the sharp reversal trading, and this is double top trading, double bottom trading. Not because you place your stop loss just below the double top, but because the nature of price action moves that way, not that sharp, not that fast, and you have your time to place your order until price went too far. Okay, we have that invalidation. This godly, let's examine. Maybe we could enter. Only one candle, and nothing here. Another godly, broken C to D, so skip it. Another godly, perform the sharp reversal. This one, yes. Sharp reversal is something that we skip here as well. Okay, one red candle, and sharp reversal after the invalidation. Nothing here. Here, this pattern is red candle. The reversal starts after that invalidation level. It makes no sense to enter this. And let's examine this situation. We have this godly. The reversal started from here to here, then we exceeded the double top and immediately we closed to the upside, but it was beyond the level, so it's not something that we trade. 2 red candles here, this red bar that means candles. Nothing happened here. Green candles here, and let us examine this situation of a unified godly. So what we basically have, we have a reversal because obviously we have two green candles here, yes? Two green candles. After that we came back to retest. As I told you, we should not exceed that. Initial movement should not exceed that point. We came to retest and the first bull close is our entry. Not a good risk reward. 53.5 to 20, come on, 24.7. 53.5 to 24.7, and it was a take profit. 24.7, and it was a take profit. Okay, let's continue. This cipher obviously will have green candles, no red candles, no reversals. This unified gap didn't complete. Okay, let us see if we have something here. Well, what we basically have is the reversal, two red candles here, and then we didn't spike it through. It could be a very good trade, but we didn't spike it. That's why do not count this as a good trading opportunity. This one, let us see what happened here. We had initial reversal, then we had a comeback here, and then we had a close above. And while coming back, we exceeded this limit, so it is invalidated. Ciphers, nothing. Sharp reversal with this godly. Obviously only green candles. And let's examine this slightly closer. So what do we have? We have reversal started, then we have green candles, and we break back to this level only here, and basically we we didn't we exceeded the level. Okay, now let's continue. This broken C, this is sharp reversal. This broken CTD leg, yes, again this cipher, and this small godly, I think it is too small to provide something, but we exceeded the limit before we had the reversal. Then we have a larger godly, and look what happens here. Initial test was this. On. And we had a reversal, two red candles, then we broke it through, and by the time we closed back we already exceeded the limit. Then another godly situation, we completed the pattern, and potentially we started a reversal. Yes, we started a reversal, 1, 2, 3 red candles, then we break it to the upside, exceed it, and break it back. So this is our entry. Place into the extreme. Protected stop is 1 ATI above that. This is the execution candle, and we have it this way. 37.5 to 78.4. 37.5, 78.4. Good. It is a take profit. Pretty large take profit. Win probability rose to 60%. Now we go to ciphers and incomplete. Well, what I'm thinking about creating the rule when it is not completed, when the level is tested but not completed to the PIP. In harmonic trading, we have the test of level rule. It is called the 3% rule. For example, when it is said that the Gartley B-point ratio should be 786, it means that it should be plus or minus 3%. So we have a kind of range. So if I add some rule here and it tests the zone, not exactly. Because different brokers has different quotes. Some brokers provided the quote that exceeded this exact level, some brokers didn't, and that's why some of you could have this trading opportunity, some of you could not have this trading opportunity. Obviously we have that reaction, then we have it back, then we close it back, and so on. I will skip it for now. Next, it is a sharp reversal. We had a reaction from here and we never tested back. Exceeded this level. Broken CD leg, broken CD leg, and this one should be a stop loss. 1, 2, 3, test is a stop loss. When you test something more than 3 times, it means that you are about to break it. Two green candles. We have a upside movement, and then we have two green candles, and then we spike it through, close it back. Need to place our stop loss here. It all happens within the zone. And this is a 44.9 to 60.9, 44.9 to 60.9, 60.9. Okay, this time it is a stop loss. Look at the expectancy, 0.54. It is much better than euro-dollar expectancy, that is 0.31. But the good expectancy should stay above 0.30, as I told you in my euro-dollar video. It was yesterday. Well, nothing here. Okay, let me examine this. Potential stop loss, maybe, but I don't know. We had initial Gartley reaction here, so you can see after the completion of the pattern we had initial Gartley reaction, then we had 2 red candles, then we had spike through, closing back, yes, like this. Okay, we entered, placing it here. Stop loss was 37.8. Take profit was 57.4, 37.8, 57.4, and we actually get a stop loss. A drawdown started. Nice. So after that, oh wait guys, what I'm talking about, what is it? Oh no, it is okay. It took place before the invalidation. Yes, no mistake. Okay, the next pattern is seen. So what we do, we don't have any reversal unless after that invalidation. Only after the invalidation we had the reversal. The cipher pattern is the one that I'm looking at. So what we basically had is this reversal started to green candles, then we spike it through, and then we started closed back to this level, and it was already late. We invalidated the pattern. Sharp reversal with this unified Gartley, I suppose. Yes, it was extremely sharp. Only limit order trading could hit that entry. Same stuff here. We did that reversal, then we went higher, then we broke lower back below this level. We could execute that if only this high was below this invalidation level, but this is not the reality, that's why we skip it. But in case you have it next time and it is below or it is not beyond that invalidated CD, then you can enter very good invalidated CD. I think we just broke it through. Only red candles, no green candles, no reversal at all. Nothing here. You see, this is what I'm talking about. Maybe 3% rule would be a very nice test of that. Okay, broke it through the zone. This one, a large, strange pattern. Okay, this was initial reaction. Oh, look at this. The pattern looks weird, yes. Let me hit the completion point. 78.7 L4. Okay, so we need to go lower. Okay, so this is the completion point. Then we had this green candles. We obviously hit 50%, but we enter at the retest and we invalidated. I just saw that we completed here. Obviously we had this reversal, then we had a retest, and then back to targets, but it was not the case. Maybe with some other broker who provided a larger spike, it could be something. Okay, what we have here is this correction going higher. Check this if it touches that 76.91.6, 76.91.6, and the high of that 76.91.9. Basically it doesn't touch that, so technically the retest is valid, and after we hit this, make sure that we do not exceed our limit order, our limit, what is that, invalidation limit. The low says 76.306 and we have 303. Wow, we were just shy, and this means that we are to enter at this candle, at this very candle. Okay, close of the candle is here. Stop loss is 25.7 and the take profit is 19.3. 25.7, 19.3, and it was a take profit. You see it spiked to 50. Well, this bearish of course is skipped because of that sharp reversal, what I was talking about this bullish. So we had initial reaction, and then we had a test, and then we had a spike to the upside. We spiked to targets before we went lower. This is the price action. Okay, went through the zone without any reversals. Same stuff here, a broken C2D leg. We are close to current dates 2011. Okay, this one is okay, completed good. So what we basically have here is this. We spike it. No, we didn't have a reversal. This means we should go higher. Now we did have a reversal, then we spike it, then we close back. So this should be our entry. And if we enter here, what is this? Stop loss is above, and I think it was a take profit. We didn't hit the stop. The entry was this. It was 19.9, take profit was 20.6, 19.9, 20.6. This time it was a winner. Yes, we didn't hit the stop. We reversed and hit the 50% at this level. The next pattern after that is this cipher sharp reversal, and we exceeded the C to D, so it was good. Only green candles here exceeded our limitation. Now let's consider this example. So we have a reversal, then we break it through, then we break it back, and basically we already exceeded. Broken C to D leg. A cipher pattern have green candles, then what is this? Nothing, not completed. Spiking and reversal is the sharp reversal. Okay, potential trading opportunity here. We had a reversal, then we had a break back, we didn't close above, and then we spike it back. Okay, invalidated. This one went through the zone without any reversals. This one is nothing, invalidated. Okay, red candle, then we had a reversal. Interesting, very interesting situation. Okay, 1, 2 green candles, then we break it back, and then we install a bull break, bull close, and it does not exceed this limitation. That's why we stretch it to the extreme. Then we place our stop loss orders. We then go here to measure the stop, that is 22.3, and this one is a 49.6, 22.3, 49.6, 22 and 3, 49 and 6. And I think it was a stop loss because this penetrated that. Yes, we were shaken out. Big guys hit our stops. Here's the overall chart. Let's continue. The expectancy is still okay, it is 0.44, the win probability is 57, while still okay, with this average risk reward of 1.52. It is still okay. Next, another situation here. This Gartley, and look at these two green bars. Reversal started, then we spike it back, you see, and this green bar is our entry. Nice winner. Textbook 51 and 1, 40 and 8. 51, 1, 40 and 8. Was a winner. Then let's go to this cipher pattern. Nothing. Okay, the reversal started here, and then we did the test, but it exceeded the limit. You see, we had that reversal, then we tested, and we exceeded the limit. If only we didn't exceed, then we could enter the close below this level, and it could be a nice waterfall, but it was not. The bull one, of course, is invalidated, so I just don't spend my time talking about it. Sharp reversal. We had one candle, one red candle, no retest. Green candles here, nothing is reversing. Okay, this one is a good situation to consider. We have two red candles, this signals a reversal, then we break it, spike it through, you see. We did not exceed this limit, and then we close it back, closed back here, below this level. So this is our entry, according to the rules. What was the candle? This one, yes. So this is our entry, this is our stop loss of how much? 74 and 6, and the take profit is 73 and 2. 74 and 6, 73 and 2. Nice winner. And again we recovered our drawdown, it turned into 0. The drawdown was recovered. Zoom it back. Another pattern here is this unified Gartley, but this one I don't know how it performed. It could be a potential stop loss. Okay, we have that reaction, yes, then we have a test, and then we close it back. Let me place my stop loss order, and we hit that, spike that through, and this was that close above. Stop loss was 42.4, take profit was 92.5, 42.4, 92.5, 42.4, 92 and 5, and in this case it was a take stop loss. You see, immediately after we recovered, we started a new drawdown. Immediately after that. Well, it happens sometimes. It is frustrating when you hit your stop and price goes in your direction and leaves you behind. So you cannot do anything about this. Okay, no reversal here. 2 red candles needed. We have a reversal here, then we have a spike to the upside, and then we never broke it back. We exceeded the limit. Another situation is this. Let me zoom it in. Obviously we have a reversal here, then we spike it through, and then we have that close below. Let us stretch the fibs to extreme, place that stuff, ATR stuff, and then we go to measure it. 60.2 versus 52.8. 60.2, 52.8, 60.2, 52.8. We recovered. Just recovered. It was a retest. We broke that, came to retest, and then we should move higher. Simple support resistance trading. And we came to a retest. Well, I need to do some testing on that equity curve. Yes, maybe after the break we always have a retest. Maybe there is something here when you have a break and then it is retested. maybe there is a pattern here, and in order to make those retracement smaller, maybe you should have a rest after you break the new equity high. Skip some patterns, let the euphoria vanish, and after them, when you become calm, you come back to trading. Maybe it will make sense. Okay, again the pattern appears again and again and again. Yes, I mean this execution pattern, the double top pattern. So we have two candles, 1, 2, 3 candles. It is a reversal. Then we break it through and close back. So this first candle is our thing, our entry. Place our limit at this level. Stop loss 1 ATR above. Let me zoom it in. This is our entry candle, the red one. So the stop loss was 29.3 and take profit was 79.9. 29.3, 79.9. 29.3, 79.9. And it was a take profit. So it is the same what I was talking about. After that retest we have thrust, we have acceleration. We should have. If we don't have any acceleration, most likely that was a false breakout. It is the same. Price action is the same, because in both your equity curve is the result of your action and price action is the result of actions on the chart. They both have psychology as a key element, as a key defining element. Okay, the reversal started, we had two red candles, then we had green candles, and we never broke it. You see, we never broke it back. Continue. What is next? 2013, five years left, 13 years, 14 years back tested. We started from 1999, so 14 years already done. 2013. Okay, so what we have here is this. It was not a reversal. Well, it was a reversal. We had this two red candles here, and then we break it back, and then we had a close below. So we need to stretch this to the upside, then we need to place our limit order, stop loss, and then you see that price action, well, it didn't hit that stop and it went to the downside. So what was the entry? This red candle, yes, 27.2, and 50% is 78.9. 27.2, 78.9. So as you see, these setups, when all things come together, does not happen very often. 14 years we only had 34 setups. So if I calculate that, 14 divided 34, no, I should calculate it different. 34 divided 14, come on, what is it? 34 divided 14, we basically have 2, almost 3 setups a year. Okay, and we should understand that we have 2-3 setups a year. Then we should also add some more pairs to our portfolio. Another pair gives 2-3 setups, one more pair gives 2-3 setups, and one more and one more and one more. And if you have 20 pairs, for example, it is just an example, 20 pairs multiplied by, let's say, maximum 3, you have 60 patterns a year. And if you divide it by 12, you'll mostly have 5 patterns a month. It is trading 1 hour, 5 patterns a month, once a week. Just place a trade when everything is okay, and well, you monitor the chart for the rest of the week. And I didn't test this exact methodology on 15-minute. I did test it a different way. I did test the execution, but it was not connected to pattern, and I did test the patterns, but it was not connected in an execution, so I don't know how they work in 15 minutes in combination, but I suppose that it is all the same, because I have that improvements that majority of pairs react similar way regardless of the time frame. Well, although I didn't test that, for me it is enough to test 1 hour, 4 hour, whatever, and to draw a conclusion. If it works on 1 hour, 4 hour and daily, it may work on 30 minutes, on 15 minutes. Even if I didn't do the exact testing of this same methodology, but I did some different testing on these time frames. There are so many ways to extract money from the market. It is impossible to test them all and to find the best one, of course. And so what I do is kind of, I don't know, just develop myself, practicing my recognition skills, finding more and more better solutions. Okay, that's it. Nothing here, nothing here. Broken CTD leg. Okay, let me see. Obviously we spiked that through, no need to check it. Didn't have a reversal, not even one green bar, and this one needs to be checked. Okay, one test, reversal, didn't test the low, didn't exceed that, it was nice back into trend pattern. And this cipher is good. See this, how good this cipher is. So what do we have? We have these two red candles, we have spike to the upside, and we close it back. So we place our stop losses here. Well, not a good idea to place it here, but I will understand that it is above. Then we enter here to the above one, 27.1, 27.1 to 42.9, 27.1, 42.9, and this way we have another thing. Continue. I remind you that the patterns are the same. They are the same combinations of ratios, the same combinations of swing. It is even the same swing identification algorithm, and the only difference is the execution, and the execution is the key. It is, I don't know, I did the backtest with sharp reversal execution, simply selling it with limit orders. I did the execution selling it with bear trend bar, bull trend bar signals, and I came up with extremely, how can I say it, extremely poor results. So I even thought of trading a different way. For example, if it doesn't work the way I want to, maybe I should trade it opposite way. And the results were so bad that I just couldn't understand why the pattern doesn't work. But the key was this execution. Not every pair provides the same execution. Some of them doing that testing, doing this spike to the upside, you see this double top spiking to the upside. It is very common. And what it does, if I enter with aggressive limit order, it simply shakes me off. It simply hits my stop loss. So you see, understand that? And to find this execution for every pair, to find this methodology to execute, you should spend lots of time doing the testing. And when you spend your time drawing patterns, when you spend your time finding these patterns, you have no time to spend to execute, to find the execution. This is the problem. MPS 5 resolves that problem easily. It draws patterns for you, and you have one problem less. Let's put it this way. You have one, let's say, huge step ahead of the market participants who don't have that MPS 5. You have a huge edge. You can spend your time only testing that sharp reversal, okay, executions, managements, whatever thing, while others only spend time, years and years, on trying to spot them perfectly, trying to draw the patterns perfectly. Okay, didn't have a retest. This is the difference. This is what makes the difference. Broken CTD lag. It is available for rent. You can do that renting for a month, 99 bucks. Not that great amount of money. Simply rent it for a month. While this month you can do all the backtesting, and after that continue trading it manually with your way, whatever you wish. But when you do the backtest, you know what are the probabilities. Okay, nothing here, nothing here. Spiking through. Invalid CTD. This one can be a reversal. We had two candles here. This is our limit. Spiking through and closing back. So this is a stop loss. Finally we had one, because it was a large streak of winners. We go here, it is 23.9 versus 24.7. 23.9, 24.7, 9, 24.7, and it was a stop loss this way. Basically MPS 5 was created to do that backtest. I created that to assist me while backtesting, because I found that drawing patterns is so difficult. Just imagine that I stretch this and I check the leg. It is 707. Okay, it fits my criteria. Then I stretch this leg and I check this. It is 618. This fits my criteria. Then I stretch this back and I apply the 786, 1 and the 786 levels like this. Okay, and only then I look at the price action within this area to decide whether I'm going to enter or I'm not going to enter. And guys, I didn't mention that I already have the algorithm plotted. I already have the lines. But when you don't have that algorithm plotted, how you decide what you should take? Should you take your fibs this way from here, or you should enlarge that this way? You see that? You have to decide. It will stay subjective for you. Sometimes you take it this way and you had a loss and you make a decision, oh well, next time I will take it this way next time. And you have another loss and you say, well, maybe I should come back to my previous swing identification. It is also a problem, the subjectivity. Well, what I'm doing here, I'm doing the backtesting. That's why I created the MPS 5, to eliminate subjectivity. I objectively identify my number rule, rule number 1, according to Mark Douglas, of consistency. I objectively identify my edge. What we have reversal started, we have penetration to the upside, and then maybe this candle would be. This closed at the level, this candle closed below the level. We stretch the fibs, we then go here, place it here, and we do the execution. 23.1 and 50% is 24.6. 23.1, 24.6. 23.1, 24.6. And it was a winner. I will leave the link in description section, so check it. There is my website. Not only it has that software, yes, it also has learn the pattern sections where you can learn these patterns absolutely for free. Nothing is needed. There is also a learning videos section and so on. Okay, so what we have a reversal, then we have a penetration, and we closed, no, we didn't even close below that, we exceeded. Next one is this, stretch it here, we have a reversal, we have break it back, and we close but already exceeded, so nothing happened here. Another one seems to me a sharp reversal. Yes, nothing here, no patterns here. Okay, nothing here. So many patterns were invalidated, pattern after pattern, pattern after pattern. Sharp reversal here. I suppose it was, yes, it was a sharp reversal. What do we have here? Obviously we had a reversal, but after that we simply spiked that and we only close it here. And we have nothing. Another sharp reversal with this, and no patterns. And look at this. Oh, wonderful example. It is a wonderful example. Okay, spike it through, and I think invalidate it. Yes, but we could enter here. After that spike, it typically provides good situations when we spike it, invalidated by this large red candle. Unfortunately, okay, this is the problem with this CTD lag violation. You see, because I have the algorithm plotted on my time frame, I can understand immediately when it is violated, simply when I have a swing turn to the upside or to the downside. Look at this situation. We broke it initially, yes, and then we close it back. Well, this is our entry, the close back, this one. So I plot my ATR, and let me zoom. We didn't hit the stop loss, and so what was that entry? 31.5, and this was 98.8. 31.5, 98.8. 31.5, 98.8. Okay, boom, you see, broke this high. 800 pips during the course of 40 trades, maybe 800 pips. We can go back to see some statistics. 63% probability with the risk to reward of 1.64, 66% expectancy, 21 pips on each and every trade. The maximal drawdown still stays 116, so it was that we had in the very beginning. Many of you would quit this strategy when you have this performance and you say, you know what, Alex, based on my 10 trades I'm moving sideways, slightly negative, so let me quit. And you never have this. This is the problem. When you do your backtest, you know what you expect. When you don't do your backtest, you simply should believe what others say, what I say, what books say, what trading courses say. You are to believe it. And your belief will vanish as soon as you hit your first drawdown. Doesn't matter what is the strength of your belief. It may be the strongest belief ever, so you may become very, very confident in it because it was written by an authority, but it will vanish. Okay, reversal started, it all took place outside of that valid area. The first day you hit your drawdown, you start doubting. Maybe you are doing something wrong, maybe you didn't understand something, maybe the strategy is not that okay as it was advertised, and so on and so forth. Okay, we didn't have a reversal here, but the situation is good. We didn't have a reversal because we need 2 red candles to validate a reversal. But the test and other stuff was very good. Well, never mind. Sometimes we miss trading opportunities. Okay, what is here is this. We had a reversal, then a stop loss trade. Wonderful. Okay, 2 red candles breaking to the upside, breaking back, and so on. Stop loss hit. $25.6, and we have 74.3. 25.6, 74.3. 25.6, 74.3. Basically, it was a stop. Yes. Okay. I will drop the link to my software in description, and I will also drop the link to this Excel spreadsheet. I uploaded to my OneDrive, and I will drop the link, and you can get access to it via your browser. Excel Online will open this automatically, so simply click that link and you will see this Excel spreadsheet, and you will see all the numbers that I type here in description, so don't worry. Okay, we had initial reversal, then we had a test, and then we had it break back. We need to restretch that. We hit the thread 2, but we didn't hit 50. Our target is 50. What these patterns? Unified Gottlieb 50. Cipher thread 2. What do we have? It is 25 and 5, and here we have 50 and 7. 25, 5, 50 and 7. 50 and 7. Okay, this one has a negative result. Next, I think we didn't complete. Started earlier. Nothing here. Broke through. Okay. Started the reversal here. Maybe slightly lower. Then we spike it back, invalidated. Okay, obviously invalidated, didn't complete. The small one. Not a reversal. To validate the reversal, we should have 2 candles. Okay, the first reversal happened beyond that invalidation level. Cipher pattern is okay. Let's go to hit this. Maybe we had something invalidated. So also this invalidation level, it is X in my, but if you decide this to be 113 Fibonacci level, then you will also have these situations very well traded if you decide them to be 113. I am pretty conservative, I'm pretty strict, and I want to have my zone very tight. I wasn't that conservative earlier, but now I became more mature, maybe. Okay, we have a reversal, we have breaking back, and then we have breaking back once again. So at this candle we enter. Here we place a stop loss, and it was 28.8, and the take profit was 83.0. 28.8, 23 even. Okay, the drawdown continues, 82 pips, and it doesn't look like 82, yes, it looks like, I don't know, something small, because it all is relevant. you compare it to your previous movement. If your previous movement was large, it doesn't seem like you have a large drawdown. If your previous movement was small, it looks very large. Okay, this was a reversal, this was break it to the upside, break it back, and we exceeded our limitation. Invalid here, sharp reversal I suppose. It happens, yes, but it doesn't worth placing limit orders, because in majority of cases you will have a negative expectancy. Okay, the reversal started, then we have this situation, then we have this, and then we close it back. Wonderful. It is a good confirmation, then we should enter. We close back here. So it was 38.2 and take profit is 42 and 2. 38.2, 42 and 2. 42 and 2. In majority of cases we have the risk reward for individual trades being positive. With euro dollar in majority of cases it was negative. But well, it doesn't matter that much the individual risk reward because sometimes we have large patterns, sometimes we have small patterns, and the distribution between large and small patterns is random. You never know when you will have a large and small. That's why you can have a stop loss from your larger pattern and you have a take profit from your smaller pattern. And that's why you need to calculate your risk to reward not based on the individual trades but based on the results, based on your closed trades. So this is 1.66. But if you use a fixed fractional money management rules and you always risk 1% of your account on each and every trade, of course it will make sense if you have a what you have if you have an individual risk to reward, because your risk will be 1 and your reward will be something compared to that 1. Your reward depends on that risk to reward. Your reward depends on risk to reward. Didn't complete here. We did complete here, then we spike it through, back, and it was invalidated. Nothing here. This one. Okay. You see how often we have this top and then we have that second top. It is very often, especially the dollar yen. Oh guys, we don't have that reversal. We don't have 2 consecutive green candles or red candles, so it cannot be a valid reversal here. Consecutive red candles. The rule is broken here. Then we have these 2 red candles, then we have a valid reversal, then we have this, then we have break it back, but it happened outside of the valid zone. This means what? This means that we should stay away unless your zone is wider. Okay, we stay away from this. Then let's go to hit this and let us see what happened. Only 1 red candle, no valid reversal here. Invalidated C to D to the bearish pattern and didn't trigger to bullish. Just broke it through without any double tops. And this one is a valid entry, but it was a stop loss. We had red candles, several red candles, then we spike it and then we close it back. Very mechanical execution, yes. It doesn't 27.5 to 24.2 or 54.2. 27.5 to 54 to 54.2. The execution is pretty mechanical. Don't need to think. In harmonic trading, it is said that the price should give you a reversal, and that after a reversal you should have a follow through. And what you understand by this sentence, it is up to you. How you understand this, what is a reversal to you and what is not a reversal. Good, we have done the backtest, 20 years of backtest completed, and now we have that setup that is saying this rare situation when we have how many patterns? 3 patterns a year. This is the situation when we have this godly, and it is valid, so don't miss this godly. Maybe next week it will complete, so place your alerts, right click on the price, go to trading, place alert. In order not to miss this opportunity, wait for that top, double top, and so on. Okay, here are the results. Let me switch this to this. Smaller number. We filtered majority of trades, but it was needed. 58% probability with this. If you put your invalidation to 113, you will have slightly higher win percentage probability because of that. 113 wider zone, more reversals, but I like it to stay tighter. Okay, 58 win percentage with an average risk of 1.67. Well, it may slightly vary. 44 trades only, better to have 100 or more, but it is what it is. I don't have more data. Control V. I will share this link to this what is that, custom site for Prax 20 Excel spreadsheet, and you can see how it goes here and here. By the way, in my yesterday's video of euro-dollar, you already have that link in the description, so you can go there and click that link. So you see, when I click save, it says uploading to OneDrive. Okay, now we have the results of that. Well, if you like this video, give me your thumbs up, share this video on social media. Hope you remembered those rules of execution. We didn't have very much management here, only maybe the target adjustment when the price exceeds the extreme. But this strategy was created specifically to have less money management, to have more free time, because trading should provide you with free time. It should not make you always busy watching the screens while managing. So this is the strategy that almost set and forget, but not that. After the execution, of course, it is not that a limit order set and forget, but after the execution, after all these things come together. Well, hope you like this video. If so, give me a thumbs up, share this video on social media with your friends, maybe Twitter, Facebook, whatever you have. Also, follow me on TradingView. I post these ideas on TradingView pretty often, and also I have a live trading chat on TradingView. Currently we are trading harmonic patterns. I explained the execution and management of harmonic patterns. If you want, we will switch to advanced formations, for example. Not many of you have time to watch the screens to manage the patterns, and we will mostly discuss advanced patterns there. Maybe I will switch it back to advanced patterns. So those of you who are advanced pattern traders will benefit from this. Those of you who are from harmonic pattern traders will also have a great understanding of this type of patterns. And until then, good luck, good trading. Trade your plan and plan your trade. Hope to see you soon.